Hello everyone, this is episode 48. So this is 16 times 3, end of season 3, my friend. It's a kind of a milestone event for us, isn't it?
Season finale.
Season finale, correct. And so welcome to Long Shots, our weekly banter on business, finance, and practically anything that we find interesting, intriguing, and relevant. And today has been quite unique. Big piece of rain fell on Delhi as we were on our way, but that didn't stop our very special guest, Mr. Vatsal Gaur, Associate Partner at HSA Advocates. Before we go into Vatsal and his distinguished background, I'm very excited about this chat already, while even, giving a brief narration on it. A friendly reminder to all our listeners, do subscribe to our channel, do search for Long Shots on Deezer, Spotify, Google Podcasts, and many other eclectic podcast apps. Eclectic is back. It's been a four week gap before I said that. So yeah, Vatsal very quickly realized that our vocabulary is very deficient. So we kind of
go back to the same words.
Circle back, lever on what we have said earlier. So do search for Long Shots and hit the subscribe button so that you get that nice little notification every time an episode goes live. And this is Nikhil Arora, and I have with me Sridharan. Hey man, how's it going?
Good. Obviously stayed up a little bit this week watching
from
Chandrayaan 2
from 1:40 a.m. till 2:15 a.m.
Yeah, but no, it's good to be here, and I'm looking forward to the chat today. We've got a couple of
you made no comment on the mission, man. You just kind of went straight past it.
We'll come back to it later. We'll talk about last mile connectivity.
Yes.
Let's get into our guest today.
Yes, most definitely. So Vatsal is working at HSA Advocates, Hemant Sahai Associates. That's the full name. You've been there since June this year.
Yes.
And prior to that, you were an independent legal consultant for 2 years.
Correct.
And prior to that, you obviously have a very distinguished CV. You worked in big legal houses, Khaitan and Co., J. Sagar and whatnot. And I think then your legal practice was merged with HSA.
Yes.
And you've been around the block, right? You've kind of been part of formalized big legal setup. You also had your independent setup, and then you kind of, circled back. And you focus mostly on startups, angel investments, pre-series A, M&A, PE. So lots of common interests here.
Yeah.
So welcome, Vatsal, and it's good to have you here.
Yeah, thank you. Thank you both actually for having me here, and it's an absolute pleasure. I think Chandrayaan was for me still a success. I think we've hit orbiter, so that's not a bad idea.
Yes.
Thanks for introducing me. I have, if I was to summarize sort of my journey so far, it's been about 8 years plus of working on various legal nuances around transactional practice. So I would look at it as transactional practice, which includes right from big ticket private equity to strategic M&As, and then in the last 3 to 4 years, I've seen a shift where my focus was more towards venture capital deal making, both on the buy side and also on the sell side. And you always make sense of things in hindsight. So I think for me, what makes sense to now speak of is that when I did decide to go independent back in 2017, what seemed like a bit of a risk back then, having left some of the most prestigious and larger law firms that the country has to offer, like Khaitan and JSA. I think the idea was really to sort of start with doing early stage work. And because I also was acting like a startup, I think there was a lot of mutual empathy with founders, especially of companies which were doing pioneering work, especially in the technology space.
Right.
So that's been the journey now, and essentially was looking to have a larger platform to service clients, and that's when I met Mr. Sahai, for whom I'm extremely grateful. I think we had a good click, and I merged my practice with HSA, and I joined them as an associate partner.
So yeah, like your work area as an independent legal consultant and what you're doing right now at HSA, is there a fair bit of overlap between the two? Like you still focus on early stage mandates?
So I'm also, as part of the team, I'm working on the M&A and private equity team, so that's always part of the work. But yes, I do tend to focus and ensure that we have some interesting deal flow on the early stage and the venture capital side of things.
Oh yeah. So how's sort of the deal flow been like though? Like since you started, and are you seeing like a uptake, or do you think it's sort of softening right now, or general cadence, or any view on that, on how you see the market?
So I think the market, I've been over time been realizing that there's been a lot of the early stage work is quite unorganized. There are a lot of these, of course, there are a lot of incubators doing great work. I am in touch with some, including the IIM, Ahmedabad, CIIE, with whom I hope to be on the panel as a lawyer. And there are other such incubators doing some interesting work, including the one with the Ashoka University. But I'm also noticing a lot of brokers which are entered the market, and these may not be institutional in terms of investment banking, but so there's a lot of that going on. So I think there is an uptake in the sense the early stage work is still going on. So I think the recessionary effects of the larger macro is not really affecting startups, is what I would say. Especially in some sectors such as fintech, I think EVs, e-commerce. I mean, these kind of sectors are still booming in my view, because most of this is driven by just the distribution platforms. They just want to keep increasing distribution networks, and I'm seeing a lot of deployment of capital in the bandwidth allocation towards distribution channels. So whether you're a fintech player or what Sunil Nigam or PhonePe now calls a tech fin company, there is a large amount of focus on just increasing the distribution channels. And then post that, what I'm noticing is that a lot of businesses are just supporting each other. So I feel that unlike an ILFS debacle where ILFS does become a Xylo in the end, and they don't have supporting institutional players helping them out. Right. I think in the startup space, because a Paytm app will have another e-commerce guy on the same app. There is a sort of a bonhomie even the mathematics there is each business supporting each other. So I think that space is still booming, and it's an interesting space to be in, to just observe how much things are changing on a daily basis.
But interestingly, you mentioned that before we go into, you're obviously more fairly optimistic on the overall deal flow and the startup domain, and you don't feel that the macro headwinds are kind of affecting it too much. But before we go into that, you mentioned briefly that a lot of brokers are in this business now in terms of from the perspective of providing legal or financial services practices. Do you see there is some sort of a consumer interest theme being played out? Like, are there? Because at the end of the day, I think there is a price point at which startups operate, right? Versus blue chip listed companies. Yeah. So they would obviously like to get a KPMG, EY, or a big legal kind of exposure, but their pockets are challenged by it. Yeah. So do they end up getting do you think the market is so informal that the basic quality of service itself becomes questionable depending on guys who are out there?
Yeah, I think that's a big concern area for me personally, given that I think on an average, on a daily basis, I'm talking to at least 5 to 10 entrepreneurs, whether as part of my pitching to them or them reaching out to me because of certain networks or referrals from their peers. One theme that seems appropriate is a shortchanging in the quality of service, because it's like you say that too many sort of cooks spoil the broth. I think the same thing kind of applies even in this space, because you have a lot of these aggregators who just aggregate. They're not really putting value, and that space is affecting good quality legal advice. And a few times, I wouldn't say a lot of times, but a few times I'm noticing there are founders and companies who've done a seed round of say $200,000, and they're looking at a pre-series A. Right. And I see the kind of documentation they've signed, and I see that they've completely hijacked their rights in that agreement. And at that stage, when you ask them that what were you thinking, they just say we were short on cash and we just didn't want to spend money. Or sometimes you also see that the early stage investors have such leverage on founders that they basically are able to bring in deal documentation and investor rights which are quite onerous. Right. And I think that's one thing which is really funny about the ecosystem in India. I think there was, I think until 2014, there was a lot of private equity work that used to happen. Yeah. And then the semblance of private equity and venture capital has become completely almost diluted. There is no difference, I feel. A lot of these funds have the same LPs. A lot of these, the investment mandates that they're running with their LPs are very similar. And that's why a lot of private equity player now is happening on the back of VC play, as against what private equity was supposed to do. Right. Private equity funds closely held companies which are already got proof of business, are running a good sweatshop and are now progressing towards the next level. They have an IRR based theme. Whereas VC play was always a valuation upside game. It was a patient holding on game. What I'm noticing a lot is that if you look at the deal documents and you see the kind of rights that people ask for, even at a super early stage, and these could be angel investors.
Yeah.
Because you see LinkedIn now, everyone's an angel investor, right? Everyone's a serial entrepreneur. So I think it's getting very confusing to understand and make sense of certain things. So I mean, no offense to anyone. I mean, I'm just saying that that's something I've been noticing. So that early stage work, I think there's a huge scope for some legitimate businesses which are either providing a single stop shop for businesses to reach out to good sort of service providers, whether they are financial or legal or company secretarial or audit accounting. So I think there is that space. It's still not completely saturated.
I mean, it's funny because I was just recollecting our own experience from an angel network perspective, where we were in fairly advanced conversation with one of the big angel networks. Obviously, no names here, but yeah, what was interesting was that in almost the penultimate stage, I mean, when they kind of were giving their terms, that also priced in the legal expense at their end, and they were like, we are going to hire a lawyer and give you a term sheet. I'm like, no, you're not. Okay, fine, you hire a lawyer, but I hire my own lawyer. I mean, that's just not how it works.
Not looking for that service, right?
I mean, what are you saying, right? So I was because I think we also came from a kind of we were taking an outside-in view, right? I mean, this was our first experience of operating a startup fundraise process here, and then we realized that there's a lot of kind of confusion on where who are the stakeholders and where do their interests lie.
Actually lie,
And it helps being somewhat cynical as well, but it helps being a little cynical, and it helps being exposed to sort of the banking world and interacting with lawyers at different engagements, not directly for our own company, but even sitting on the fence there, you sort of understand what's happening, right? So,
and including in your previous roles, I mean, both of you have also pivoted from banking and from equity research, so you do understand how things work, how contracts work. So I think it's nice to hear that from someone like you. But just to take an example, I'm doing a deal right now, and the founder, I'm not going to name anything, I'm not going to give details, but the founder is front-ending the negotiation, merely because the founder is sensitive to the fact that he doesn't probably want a very sort of street smart lawyer trying to hustle a deal with the investors. But my hunch is that even in this, and it's an early stage deal, it's almost like a Series A right now, and I'm noticing that the conversation that happens is more like, this is standard, this is what we do. And I think while you want to be inspired by Silicon Valley term sheets, I think there is, in India, to do business, there's always an emotional angle. And I think someone who can crack that is the better deal maker. So I'm waiting for some clarity to come in this early stage investment brokering aspects, because I think I go to a lot of startup events, and I meet a lot of these, I don't know how to define them. They call themselves incubators / accelerator / investor.
/ co-working space.
/ co-working space in some cases. So, I mean, some of them are doing some great stuff. I personally feel WeWork Labs has a decent model, and I think there's some interesting companies that I might want to explore in that. I do also see AngelList, people like that doing some decent work and being able to actually cut a check when they're convinced. So I think we need more of those people who are willing to cut a check, as against just staying who they know and what they can do. Because I think a lot of angel investments, including the angel networks, are very opaque. You don't really understand what's happening. In fact, it's very commonplace when you're doing a deal where an angel network is there, that you'll only get to know the investor names right towards the end of that signing process. Right. You'll be like, oh, okay, I didn't know that XYZ is going to be invested. So I think there is a lot of scope for some, bona fide, and I wouldn't say bona fide in a negative way that things are not bona fide now. I'm just saying a more
transparent way.
Transparent and structured way where you know what you're entering into. Because a lot of these incubators and co-working spaces also take a cut on equity. Just for the fact that they're giving space. Now I think there's no value add that I see in that. And I think that because a lot of people agree to certain things, it becomes the norm, and then when it becomes the norm, things become problematic and later on. Just to give an example, another company I met recently in the edtech space, sitting with an investor who came in at a seed round of about 4 crores and sitting with 33%. Now I spoke to the founder and I said, hey, but you're looking at a Series A, you're already diluted so much. By the time you do a Series A, you'll be below 50. How are you going to expand? How will people take you seriously?
Yeah.
And I think that's the conversation that people aren't having. So as a lawyer, I try to wear different hats, and I think that's one thing we were touching upon, that it's so important in current times to keep reinventing yourself. And while what I say might seem premature right now, but I do feel that a lot of these very large scale legal firm operations are also going to witness a disruption in the coming 2-3 years. I feel that the kind of models that are prevailing, where there's so much undercutting, underpricing happening, especially in the venture capital space. I'm talking purely from a legal advisory, and I think it also cuts across in business advisory.
Sure, yeah.
The big fours are also getting a lot of competition from other players, such as the BDOs and the other sort of players, which are now doing actually more deals. And I think there will come a tipping point where there will be some segregation. Either it's going to be segregation based on nature of clients versus nature of complexity, or there has to be something which will draw the line between why seek legal help in the first place and when do you need expert legal help.
Right.
And I'm noticing that there are some firms which are doing things right in that they're getting super specialist in some ways, but also with how data being the new oil, I feel like you also do need generalists to be able to understand how data is changing and to read that data. So it's a very interesting thing. I do note, I kind of have a premonition that it's possible that going forward there will be a multidisciplinary approach to deal advisory. So I don't think the future is far where you'll have investment bankers sitting in a law firm working for the law firm, and likewise on the other side. I do see a lot of this happening, and especially in large, in scaled up startups. You look at a PhonePe, you look at a Cred, you look at anyone which is scaling up faster because those founders are ex-entrepreneurs already and have done successful closings before. I noticed that a lot of people in their senior teams are people who are multidisciplinary. I think this trend started with Indigo when Aditya Ghosh was a lawyer turned CEO, and now he's joined Oyo in a similar capacity. So I think that there is an interdisciplinary aspect of things which will always there in the US, but I think it's going to shift to India now.
I mean, it's also a function of like when you mentioned that who can write a check, right? So I mean, a shortage of capital obviously makes the market, not the most mature. And probably those pieces will start fitting in slowly. Like even in terms of like, if you look at the cycle of any company itself, probably in the first 1 or 2 major phases, it will be dominated by tech geeks or technocrats and that kind of profile. Then once it kind of reaches a sustainable scale, then you actually have generalists and business school guys who have a level-headed approach towards things to take it forward. So probably the ecosystem at large also would have some sort of an awakening from that perspective. But coming back to like, if you look at like the present, I mean obviously like we can kind of try to foresee how things might move, but in terms of major challenges, legal or otherwise, which a typical early stage startup founder may face, be it, I mean, one thing that kind of...
I think the first thing is just interpretation of the language. Start with that.
Yeah. I mean, the first thing that came to my mind was that, just the compliance load in our country. I mean, it's not a legal point, maybe. It's not a legal point. It's compliant, but the compliance load, I think we were reading that there was a study done recently in which they were looking at like, multi-billion-dollar unicorn startups in US, East Coast versus in different parts of the world, and they were looking at, what's the valuation, how many people do they have, what's the value. So you had like, $2-3 billion worth companies in US with 30 people. That can never happen here, right? You'll probably, if you hit $1 billion, you will obviously have more than 2,000 people already on your rolls, out of which like 300 people will just be putting in your TDS challans every month. And I mean, so compliance I think is a major thing. Obviously in terms of taxation, like the angel tax saga was going on, which I think got some bit of clarity in recent days. And thirdly, probably from a policymaker's perspective, there's always a bit of skepticism in what and how things move in the startup domain. Like just before the podcast started, we were talking about share premium and how valuation is viewed. But as a lawyer, like what are the big piece challenges that hit your mind faced by any entrepreneur who wants to start a company, say tomorrow?
So I mean, before I say anything, I would definitely though say that The government, in my view, has been has been responding well to kind of the legal and regulatory changes that are being merited by constant change in technology.
Sure.
Whether you look at electric vehicles, whether you look at fintech, I think various government bodies. So, for example, fintech. We know about the RBI now coming up with safe harbor provisions which allow for a regulatory sandbox for fintech companies, where the fact that they are willing to understand businesses which are disrupting based on technology and which are actually solving the problem which banks and NBFCs are not being able to solve. So I feel that I know I tend to take an optimistic tone, but that's probably just the nature of who I am. But I also feel that in practice, because let's also remember that a changing regulatory regime is a sign of development, because a lot of laws were very static in India for a long, long time. And I think people are just realizing that those laws need amendment. So something like, you talked about 2,000 employees. The moment you have more than 20 employees, the labor laws apply. We now see that the government has taken up this Herculean task of codifying laws, which are labor laws. So around 40 plus laws are proposed to be codified into only 4 laws. Mm-hmm. That's called a simplification, and I think that's a big kudos to the government for doing that, because I think it's been a long time since our parliament has actually done what a parliament should be doing, which is writing laws.
Yeah.
And I think that's happening now. Angel tax, I think, again, is getting rationalized. One thing is that informally, there are tax circulars which have been issued to the administrative officers in the income tax department that you need to ease the whip on startups, and you're not going to ask questions in the usual course of business, which was happening. So out of every 10 deals, 1 or 2 were being questioned that how did you justify the share price. Now that, I think, what the government has now said is that as long as you are registered with the DPIIT, you will get the benefit of the tax exemption so long as you meet the conditions. Some of them are around turnover, some of them are around date of incorporation and things like that. So I think as long as you are able to generate that certificate, and I do see that changing now, so that's a positive. And I think also other changes that are happening is, like we spoke about, how the government is looking at differential voting rights. It started with actually the SEBI for listed companies allowing for DVRs,
sure,
and paving the way for the Ministry of Corporate Affairs to then make a similar kind of law which sort of sets it up. So there are some questions there also around how will these extra voting rights convert into normal voting rights. I personally have some questions around how these voting rights shares will be priced and taxed. I think right now there's complete zero law on this, because these shares are technically more valuable, but how do you tax them? So these are questions which I recently wrote about also in one of my articles. But I think that overall regulations are reducing. So for example, company law, which I think when the amendments had come in 2013 onwards, had made a lot of provisions criminal. There were criminal sanctions for...
Yeah, if you can hold that point, like, don't you kind of feel sometimes that there's that blunt force approaches, that's always the starting point. Then everybody calms down.
Yeah.
And then common sense kind of prevails.
I think in some way we're all going the Trump way, right? We first impose a huge sanction and then we take it back to make the end medicine seem less bitter. And I think that's what is happening with legal regulations, and that's what's happening with policy changes. There are first extreme announcements made, the industry fights back, gives recommendations, and then you reach a halfway house. And I think that's what the government is doing. That you saw the Niti Aayog doing, putting a deadline for electric vehicles, 2-wheelers and 3-wheelers by 2025. Now there is a dictate where they've calmed down, saying any engine which is pro environment is fine with us. And I think overall there will be some balance there too. So while it's not the best way, and I think the government continues to be reactive in its approach and not sort of proactive, laws are getting rationalized. So even company law, which I think is a good news, company law is being amended as we speak to make less violations criminal in nature. So you don't get imprisoned for everything, which you can have a penalty procedure. So I think that is another rationalization which I'm looking forward to.
But it kind of came following the CSR announcement. So I'm just kidding.
Yeah,
I mean there's always that. I often feel that might be one big reason might be that you have journalists making specialist laws in the first place anyways, but that's just maybe a personal view.
Yeah, and that's why entities like Niti Aayog, Digital India Foundation, they're doing good work. It's just a matter of even Startup India, Invest India, but it's just a question of who has the ultimate say. I think that's very unclear.
Right.
So Invest India, Startup India are partly owned by government, partly owned by industry bodies. So I find the dynamic very interesting in its own right. A lot of my it's funny because a lot of my schoolmates are now in Invest India and Startup India. So
Same here.
it also feels like okay, so we all ended up together in some form. And are we can we really do something cool together now? Because growing up in good schools, we had access and we thought we'll make some change. So maybe this is a sign for all of us, including you and us and everyone, to sort of collaborate and find ways to see how we can empower the ecosystem in our own respective ways. Because I was also noticing recently how there's a lot of, within fintech companies, for example, I won't name them, but some of the larger players, there's a lot of rotation happening within the employees. And I'm talking senior level employees, chief of staff level positions. And it's almost like the founders are okay with it because they feel that in the end everyone's benefiting. And so it's very interesting that whether we can be that agile in our respective professional environments, can we embrace change to that extent that you stay committed to your goal but also be agile to the fact that there may be disruption even in your specific industry. And I think the only way then the next sort of logical step is a case of collaboration. And that, I think, is where we are headed. I think co-working spaces is a fine example. I don't understand what the valuation of a co-working space otherwise is. I think the only way they can monetize this is to make it more and more and more multifunctional.
Sure.
You might be having Zumba classes in co-working spaces tomorrow as someone else is doing a term sheet. So I think that there is some clarity which a lot of us need in terms of how the market is paving itself. But as far as the laws are concerned, I think that's a function of how the market first changes. Because if you don't have a diktat on when EVs have to be compulsorily registered on the roads, you can't have laws around it. So I think it's a bit of a issue there. And similarly, for other disruptive technologies, AI, ML, explaining that to a government babu is just impossible. Cryptocurrency banned, no reason given. So I think that there is, and that's one thing I'm concerned about because back in 2000 when you called it the brain drain of IT, I think there's a lot of crypto brain drain that's happening right now as we speak, and there are safe harbors being given by governments such as Estonia, governments in Dubai, and a lot of Indian founders I'm seeing are actually setting up shop in Singapore, even though the operations are still happening in India. So it's really funny that just setting up a separate SPV outside makes you not regulated in India. So I think that we need to start looking at the startup space as a regulator with more pragmatic view and allowing for the benefits that it causes, which is basically employment. That's the biggest issue that India is facing, and I think the government is waking up to that.
You kind of making a point on the startup ecosystem, but there's obviously a wider economic narrative which is also going on, right? It was only, I think, last episode when we were discussing the triumvirate of big bank mergers, FM's interventions, and there's one more, I think I'm missing.
Sluggish GDP growth. Forecast,
the GDP numbers kind of
tapering off from 7 to 5. Like, there is a negative sentiment out there, right? When you look at the broader economic narrative, what sort of Nick is talking about, from consumer slowdown to no real capex spending projects visible. And we sort of were talking about how it sort of parallels what happened in the US in the post-Great Depression area. And what is it that, what was the key parallel there about
the debt deflation? Is probably an era of debt deflation. But I mean, if you look at, you obviously kind of was decoupling startups from this, right? For like looking at it as a separate engine. Not much is changing for it. But like, what about some specific, sectors like fintech, maybe like fintech? If you look at like digital lending, like we had a few online lending.
We've had them on this podcast, right? Guys who ran fintech platforms, and they were obviously bullish. But
I think one reason they might be bullish is because if you still look at the numbers, with a population of over 1.5 billion, with the advent of Geo and of course with data being accessible to tier 2, tier 3 cities and even villages, there's still a lot of inclusion, which is financial inclusion, which is possible.
Sure.
And from whatever I keep reading, there's a lot of discretionary income in the hands of tier 2, tier 3 cities and the merchants there. I personally I'm friends with a lot of founders in the fintech space, and one thing I keep hearing is that their repayment capacity is far better. In fact, they're running at a rate of about 97% success with merchants who are actually paying up to 24% on SME loans. So I think that's why I decouple, because while the macro picture might impact the organized sector, there's still a lot of unorganized sector which is getting into the organized sector. So as the sort of denominator will increase, I think the recessionary impact will reduce.
Diminish, yeah.
I mean that's true in cases where the fintech platform is the principal, right? But like, what about where it's an agent? Like, for instance, if you are a lending platform who's aggregating NBFC loans, right? You're kind of still dependent on the wider macro headwinds. But people have been very bullish. Like whenever we have spoken to people here, they've been bullish. Now there are two obviously aspects to it. Obviously, when you're asking questions about someone's own space, there's kind of a default. You have to be bullish. Otherwise, how will you kind of take it forward? So we kind of try to always feel, whether this is something. I mean, there's something fundamental going on, or is it just the ILFNS thing, which kind of has brought in ILFS thing, which has kind of brought that kind of noise into the rest of the ecosystem. Then we were kind of wondering, if you look at the fintech funding numbers, those numbers right now are at a lower end, right? One version we got was that they are at a lower end because the first set of fintech platforms are now getting their first exits. So like we're at that part of the cycle. Do you have something to like? You feel? Do you agree with that? Or
this is conjecture. I mean, what is the hunch? I mean,
no. So it's tough to give a specific answer, but what I'm seeing is that there are the larger fintech companies are currently, it's the same thing with Amazon versus Walmart. They're looking at market share, and I think what PhonePe has been able to prove in a relatively low-key way is to basically explain that you don't need to be a fintech player to actually be doing fintech business. For example, you can be just a tech platform which houses different businesses within it. And overall, I think everyone is heading towards becoming the next Amazon. So it's very confusing. I feel like everything is entering into what could be an Amazon. And with AI and how it's interplaying, I was at a very interesting event by Singularity University where one of the professors from there was talking about how using Alexa, you order a battery and because you don't know which batteries, they actually are Amazon batteries. And I think if you're, so if you were to analogize that with what fintech is doing, I think the reason why the dry powder for early stage fintech companies is slightly paused for now is because people are still waiting and watching what the larger animals are going to be doing. So I think a lot of that will be at the back of the next big fintech play after Paytm has been PhonePe, Cred. I think there's a lot of positives have to be seen, but you're completely right. I think at an early stage fintech space, it's still tough waters, especially these lending based platforms. But I think P2P lending is going to be, in my reading, P2P lending will get another push now, both from a regulatory standpoint as well as from a investor standpoint, because what's the next step after you get someone on board? Once you have financial
the next level of optimization.
The next level is to be able to grant them easier ways of financing. And like you said, there's a debt deflation. I think there will be a tapering down in terms of interest rates. There will be consumption will probably get backed by actual indicators as against the faff that we sometimes have been seeing in India. Because let's face it, we're just a service-oriented country, where we still haven't been able to hit that manufacturing stage, which you were taking the example of the US. I think any great economy, or I would say any developed economy, had a very strong manufacturing phase, which I think India slipped and missed. And I think the reason why Niti Aayog was pushing for electric vehicles and continues to is because we feel that while the standard auto manufacturing, which actually funnily constitutes half of our entire manufacturing potential, will take a hit, but electric vehicles can be the first time after a long time that India can start developing technologies, especially around the batteries and using alternates to lithium iron phosphate, for example, to really stem up our manufacturing capabilities.
But like EVs is very, when you kind of mentioned, obviously like from a manufacturing perspective, a very exciting space. But within the EV domain itself, like in the startup space, there have been a few startups in the two-wheeler high-performance bike domain, right?
That is on the infrastructure side as well.
And then there are obviously guys who are on the mobility ecosystem or charging infra side.
Fleet management as well.
Fleet management. Then you have some traditional family businesses type OEMs who are kind of diversifying. That's also another leg, right? But if you look at at least on the startup domain, like on the two-wheeler, high-performance, tech-oriented EV play, what my personal take has been that it's mostly been the big auto which is trying to, kind of they are acting like VCs there, right? So you have a Hero or a, they are kind of trying. If you look at Ather, that's the kind of deal, that's kind of happened. Because at the end of the day, it's a very capital-heavy domain, right?
True.
So unless you're a strategic, VCs just don't yet probably see it as a play, right? They're waiting for the other guys to ship in.
I think there is some last mile connectivity and I think fleet management is getting funding.
Sure. Okay.
You have the likes of Bounce, you have the like of Vogo, which are traditionally fleet management companies,
right?
But which are pivoting to EVs as and when there will be a pivot, which is happening now. You also have companies like Yulu, which is doing the other end of the spectrum, which I think, and he's ex-Inmobi, if I'm not mistaken. I mean, in fact, he's a acquaintance of mine, and I feel that last mile connectivity again through not a sort of, I wouldn't say hardcore manufacturing. I think manufacturing EVs and batteries, that space has less funding, but fleet management right now is where the funding is going. So I think the investors are going after the fact that let's get the aggregator who will be able to aggregate this business as against going after the individual pawns in the game.
Okay.
Yeah, I mean, that sort of checks off the boilerplate scale versus capex requirement checklist, right? If you will. And sort of like the thing with a super bike, let's call it an electric super bike or something, you write a check for $2 million. After a year, that 2 becomes 10. After 10, that like there is that apprehension from a VC standpoint. I mean, I can put myself in that space. Like, when does it stop, right? And on the other hand, when you have these sort of the Amazons of the world, which just ride on distribution and scale, so that makes that sort of intuitive sense on why FleetCo and infrastructure, the SaaS-based models, maybe sort of are coming in first, and that takes, and I mean, it's tricky like that,
and it's also, I think it's a very I call that conservative, because I feel that,
because you mentioned battery tech, right? Battery tech
that's what should be getting funded.
And I mean, at the end of the day, like if you talk to any OEM in this day and age, I mean, the cells will still be imported. They'll assemble it here, they'll put the BMS and all that, but the cells are still coming from China. Right, in terms of lithium mines, in terms of reserves, in terms of taking that long-term 15 to 20-year-old view, that requires capital, and guys want the aggregators, they don't want the OEMs. Is that like a fair thesis? I mean,
that's how I've been reading the market, and so even the manufacturers, or you can call them assemblers, it's unfair to say we have EV manufacturing in India. We should call them assembling. I think the innovation currently, from at least what's market, is that as deep as innovation goes, it's like you said, Nikhil, it's around converting the cells into batteries and basically importing cells. But I think there is a subsidy that the government has floated, I think about 700 crores for domestic manufacturing capabilities.
Right.
And I think even with this push of Chandrayaan now, when the economy is anyways in a bit of a tougher space, it's probably just to boost the morale of everyone, saying that we do have capabilities for technology. And ideally,
followed by the 100-day plan.
But I think in a utopian world, India should be funding, an entity should be funding technology and innovation, and I think that's where it could even be a government fund. There's this whole national infrastructure fund we have. I wonder why some part can't be apportioned towards technology in that fund. And you have the NASSCOM 10,000 startups. You have different of these startup aggregators and incubators. Even they, I feel, are cash starved. There are some IoT based.
So like when you are kind of, I mean, I guess like when you mentioned NASSCOM and all these kind of conclaves and platforms where you go to, has ever the kind of idea that okay, let's have an Indian sovereign wealth fund? Does that come out? I mean, like I sometimes wonder, like if you look at like Life Insurance Corporation, right, one of the most boring balance sheets ever. Right, it's $300 billion.
There's so much money in there.
It's $300 billion. That I think is a 3-year-old figure. So I'm guessing more now. And even if you look at like a 1% of that, 2% of that's like the annual startup funding which happened in the country. Right? I mean, because earlier it was like the entire idea that an SWF always has to be just oil or natural resource driven money. That's a dated concept.
That's a dated concept because oil is getting dated.
So I mean, is that even on the do you hear people talk about it, or is that like way too I don't know
ahead of its time?
Yeah, it's funny you mentioned that. Back in law school, I'd written a paper on a sovereign wealth fund for India.
Right.
That was back in 2010, I think, where I'd thought about this because of the foreign reserves that we were sitting on.
Sure.
And I think if you remember back then, we were sitting on a lot of foreign exchange money, which could be capitalized towards the sovereign wealth fund. Now, if you see the budget speech, our finance minister is talking about taking external debt.
Yeah.
So we're not actually, we're on the other end right now, at least in a macro space, we're looking at running deficit. Yeah. And basically, so sovereign wealth fund, unfortunately, I don't think is going to be happening in the near future. But we have this the National Infrastructure Fund, which I feel, like I was saying, if a certain part of it could be devoted to tech-based innovation, and the government can take some stake in it. There could be the Ministry of Information Technology could set up some business vehicle which could take some stake in these early stage tech companies, and they could trade carbon credits based on it. So I think there's a lot of scope to understand that what are you really solving for. So if you're solving for even climate change, you can do it through a government interference.
Right.
So yeah, I believe maybe if more people like us join the government, things can probably change.
Oh yes, that is now that's an interesting thread. But I mean, in terms of so you're not tremendously against statism or high amount of government intervention. You feel that in a country like ours, probably they are the ones who can take that risk.
They have the best balance sheet in the country.
Yeah. I mean, after Ambani and Adani.
I'm not pressing the socialist button in you, but I'm just kind of just
No, I think it's I think we still it always helps. I don't know. It always in investment deals you have a concept of syndicate. You have a lead and you have a co-investor. I think if the government starts looking at itself as a lead investor in certain businesses it wants to push, and basically read the market saying, okay, what are we good at right now that can be part of current technological innovation, which we can fund as a government and as based on our corpus, right?
Sure.
One is of course the changes they are making around fiscal planning. So they're changing tax regimes, which I think is a good step. Hopefully they'll further reduce the income tax rates and to boost consumption. But the other is, consumption is one pattern, but what about taking Indian companies global? Why is it that there's no, other than few examples like Freshworks or some of these companies, why are there not many examples of Indian companies going global? Like what Ritesh of Oyo is doing. If we can create more of that, you can technically be having companies which are making in rupees and selling in dollars. And I think then you can actually use...
When you say they go global, you mean in terms of operations or also in terms of getting listed, raising money there?
It could be both.
Right. Because I mean on the listing front, obviously there are some very, I think, draconian constraints, right? I mean it's pretty difficult for, I think you have to be listed here first or something like that, I don't know.
Yeah, I mean...
Which is technically an exit then.
I mean, but those changes in terms of, listing outside without listing in India, I think that will all happen more when more businesses actually have an outreach.
Yeah.
And because we keep selling services, how about having technology? I recently was at an event where I was hearing one fund. It's a domestic Indian fund, mostly does Series A and pre-Series A. They were mentioning how all their investments these days are in tech product companies, which is interesting. So someone is making that change. So I think that product-based investment deals, and if the market starts hearing that we can possibly have a new Tesla in India, I think that's what's probably now the need of the hour. I wouldn't even say it's something hopeful. I think that's what we need.
Vatsal, now I would like to now touch a bit upon the other leg of your work. Like you look at M&A, right? Now in terms of I have a background in M&A. I kind of looked at it in the UK market for a couple of years. So I was just kind of keen to understand, there in the UK market, there were some issues which were slowly creeping in, things like the value of advice, right? I mean, like in the US market, it's pretty well entrenched that for advisory, there is a clear value proposition which is there. In the UK, I recall that slowly it was kind of turning out, okay, which bank is funding the deal? So financing kind of takes the advice with it.
The lines got blurred. That was being used as a bait to win a mandate. Let's put it in some form, right?
And I have a feeling this is on the other extreme in India, right? Here, probably the investment bank which funds the deal is the one who kind of gets the advisory mandate as well. I don't know. So I just want to kind of understand how the M&A ecosystem here looks like here, because when you look at it in the Western market context, when you're pricing a deal, right, there is a clear bottom-up fundamental view which is often taken. But I think here it's more of a negotiation point of reference.
Yeah, and
right?
use the word emotional angle when you drew that comparison between Silicon Valley and let's call it D Street or whatever. So maybe that is a factor as well, or how? Yeah.
I mean, does corporate development teams in big corporates, do they run the show, or the bankers run the show, or the lawyers run the show? I mean, what do you?
That's a tough question. I kind of feel that so at least in the unlisted M&A space, it's mostly family-owned businesses which have traditional relationships with bankers and banks,
right?
And that leads to the investment banker typically being chosen. Investment bankers themselves are mini funds. I think they run as a fund in some ways because they bring on board capabilities which are then required to negotiate and close a deal. I don't think we have institutional level mechanisms where the bank funding becomes the person bringing all the advisors. I don't think that. I have not seen too much of that. Of course, in some cases where a bank is already entrenched with a powerhouse, there is that happening.
Right.
I think there are a lot of businesses which are already running banking. And like for example, Aditya Birla raised the investment. Premji invested in, although a small part, but you see that there is there's an interplay in.
They take a conglomerate advantage.
Yes.
Really to the limit.
Yeah.
Right.
I think that's what I'm noticing, and just to take it back to Amazon, I think the way it seems is everything these days is leading to e-commerce. There is what's the ultimate play we're getting there? Is e-commerce, and that's why I'm now noticing aggregation of online aggregation of legal advisors.
Right.
There are startups that are now trying to disrupt the legal market.
Yeah.
By basically by basically aggregating various legal advisors, and what that's doing is it is spoiling the market. When you talked about pricing and
it's commoditizing the market.
The market.
Right.
It's also negating the value of advice in some way. And frankly, I wonder if Indian laws were simpler. I wonder what lawyers would be doing here, because we have so many lawyers and we have so many chartered accountants and we have so many bankers.
But isn't there some value for the small fish? Like if there's a small fish who doesn't really need that bespoke of a play,
templatized solution,
hand holding.
I
need I need 4 documents templatized. Yeah. There are those needs of very, very small businesses, right? Do you think that but you were saying that the aggregators are also kind of spreading their hands and touching the other end where it kind of gets a bit screwed up?
Yeah, I think that the extension of who the ultimate advice is for is where they're getting it wrong.
Because it's exactly the same when it comes to investment advice, right? You have the robo advisors, you have the mutual fund aggregators, which are okay for a 20-something kid who's just I'm talking like I'm 60, but anyways,
bet on the economy, right?
Yeah.
I mean, simplest thing, just buy a diversified fund, bet on the economy. I mean, it goes from that level of granularity to sophistication of having a portfolio with real estate, bonds, and derivatives, if you will, to hedge yourself, and then maybe some private investments, right? I mean, you get into that level of sophistication. There is that breadth. So I guess it's
So that parallel is also there kind of in the legal side, right? The problem is that the robo-advisors kind of will try to get the big fish.
Yeah, they try.
They will.
If not that they try, but what happens is that the value, like you mentioned, the value that is ascribed to advice is then questioned.
Sure.
And the fact that you're having to justify a certain price or a value, I think that is where the market then loses.
Because the guy's going to say, oh, on this app I can get the same thing done for X.
Yeah, and I think what happens is on the app, when you have a problem, you have nobody.
Yeah.
I mean, just Uber, for example. When I used to initially get numbers of your taxi drivers, right? I used to find that very reassuring. Sometimes I've left things in the cab and I've just called the guy and I could at least get it back. Now I have to depend on technology for that. I have to sign, it's all automated. I have to type in and I have to say what happened and I have to press the right buttons.
Yeah.
But that interface is going slowly, right?
Yeah, and it's always a challenge, right? When you try to put a monetary value or tangible value to an intangible service. It is difficult. I mean, especially we are sort of culturally gold investors. I mean, could see it, touch it, feel it, we knew the gold is sitting in the safe or whatever. So that mindset to start paying or valuing service, it's not intuitive to a lot of people. Like people, I think a lot of people can't even differentiate between a good heart surgeon and an ordinary heart surgeon. I'm just giving an example, right? They're like, oh, it's a heart surgeon. So I think it will take a while. There's a cultural angle to it as well to actually understand intangible, put a dollar value to an intangible service.
So
right?
I think that is how I would distinguish private equity from venture capital.
Yeah.
You mentioned M&A, but my focus has been a lot of private equity compared to strategic M&A. I've done more on the PE side.
Right.
And I feel private equity still is banking on actual businesses doing, I wouldn't say actual, but I would say brick and mortar businesses or businesses which are generating
free cash flow.
Yeah, which are generating cash flows. Which and they back it on an IRR functionality where they look at a return over a period of time. There are very few, and I'm saying this. A lot of the exits that VCs are making are still not to private equity funds. It's happening slowly, but not all businesses are actually PE oriented.
Right.
And it's a similar example. Like not every business will qualify for quality legal advice.
Sure.
There are early stage advisors who, as I said, probably have a couple of years of experience, not the best in terms of pedigree, but seeming to disrupt some sort of the market. And where this goes is anyone's guess. Like I said at the beginning of the podcast, I feel even large scale existing legal practices will feel the crunch soon.
Yeah.
How do you sustain a law firm with 500 members? I don't know. We'll see how that goes.
Scale.
Yeah.
And this is before the FDI and legal event,
which is another beast.
which is another disruption
I think that's what
ready to happen.
Right? Yeah, it's been waiting to happen for a long time.
Yeah.
And I think again, like the sweet spots for any kind of FDI and legal when that does happen, when we do open our doors, will be the mid-market firms, in my view, which are easier to onboard.
Yeah.
And it's a wait and watch, and it's an interesting space to be in.
Acqui-hire model maybe. We're closing in to the hours mark, but I'm really tempted to touch on. I wanted to touch on compensation structure of young advocates in the Indian ecosystem and sort of how it's so different from anything else you see in the West. But anyway,
that will press it on
everywhere.
That in the legal stratosphere.
Yeah, I would like to keep things optimistic.
No, I think on that note, we discussed a lot of things. We touched upon heart surgery apps potentially, I guess.
Yeah.
And ending on FDI and legal services if and when it happens. But Vatsal, thanks a lot for
thank you
the time.
both. Grateful that you invited me, and happy to sort of be part of Transfield's journey in whichever way I can.
I really appreciate that, and thank you so much for your time. Hope you enjoyed the steaming. I don't know how steaming it was, but
it was
partially steaming cup of coffee.
It was good. Yeah, I liked it.
I thoroughly enjoyed the chat as well. So this was a good day.
Good stuff. And as usual, listeners, do feel free to send in your comments so that we can make this thing better and punchier.
And if there are any sort of young lawyers who are listening in, have any questions, you can always pass their questions to me.
Of course, yes, definitely. So we'll actually what we'll do is we'll push Vatsal's detail in the description as well.
Yeah.
So give us a shout or reach out to him directly in case there is any legal issue. If you're a founder, if you're an entrepreneur, he's the man.
Or just an aspiring lawyer.
Yes.
Either way it works.
Yeah.
Please feel free to do that. And that's pretty much it. We'll be taking a bit of a hiatus now, I think.
Couple of weeks.
We'll come up with something new for season 4.
Sure.
So a few things are in the pipeline. Maybe new voices. I don't know. Maybe I've said too much. I don't know.
Yeah.
And it's been a pleasure chatting here, guys. Thanks a lot. This is Nikhil Arora.
This is Sharad Tupran
signing off.